Have you started investing yet? If not, then what's stopping you? If you haven't invested your money because you're stuck in your own head or living a life of endless excuses, now is your chance to overcome your fears and doubts and begin building your wealth. Today, we'll be talking about 5 typical excuses as to why people haven't begun investing, at least one of which most of us can relate to. The most common excuse given by people for not investing is that they simply don't know where to begin. If you're new to investing, it may appear intimidating and even scary. You've probably all heard tales of people who lost everything while betting on the stock market, which is genuinely pretty frightening and does occasionally occur. This is why you should conduct extensive study before investing, especially if you're new to the stock market. We highly recommend you follow these 3 steps before investing if you're just starting. If you have a debt, pay it off first, especially with high interest. It's best to avoid paying interest because it can be seriously damaging. Opening an online brokerage account is the next step. Nowadays, opening a trading account doesn't cost much money. It is actually totally free. The 3rd step is to compile a watch list of notable companies. Beginning with companies whose business model you are acquainted with is a good idea. These have to be reliable businesses that have demonstrated success for more than 10 years. When you've found certain good companies, put them on your watch list and wait for a market downturn or an underpriced stock to allow them to go on sale. Once that happens, you should go ahead and buy them. The stock market will crash is the 2nd typical excuse we hear. Well, despite a few stock market crashes through the years, the market always makes a full recovery. One of the best investing opportunities you will ever have is the stock market. The majority of investors wait for the market to crash because they believe it will be a terrific opportunity to get excellent company stocks for a very low price. You may be able to purchase a company for literally 50% less during a crash in the market. While you wait for the crash to end and your company price to double, you must hold the company. Then, you'll know better the next time around when everybody is frantic and throwing their stocks on the market. Keep a distance and observe like a predator. You begin buying the stock gradually and go for it once the company is trading for less than 30% or 40% of its market value. The 3rd excuse we always hear is, "I'm bad with numbers." To invest, you don't need to be an expert in rocket science. Once you've figured it all out, investing is actually quite easy. Financial calculators are available online today to help you figure out the amount you need to invest at a specific rate of compounding to reach your ideal financial objectives and a happy retirement. You don't need to wait 3 or 4 days for news about your company to reach you because we are living in the digital era. At the tap of a button, everything is accessible, including the most recent headlines. But if investing still makes you uneasy, you should subscribe to several analyst reports that keep you up to date on your company's forecast for the future. Online, you may read economic news and surveys that will show you how the economy is performing right now. You may even follow several investors on social media to find out what they're interested in. You can look at mutual fund reports online to learn more about the common stocks that the larger mutual funds are investing in. All you need to do is, at the very least, adopt their tactics. You could just opt for the active portfolio plan if you think you can perform better. The 4th most typical excuse we hear is that they will lose all of their money. You wouldn't even consider saying that if you understand how the game works. The stock market is where Warren Buffett made his money, and he follows 2 investing rules. Make sure you don't lose any money. That's rule number 1. He advises against purchasing a stock if it is already excessively overpriced in the market. Always make sure you have a sufficient margin of safety so that you can safeguard the money you have invested. The idea behind margin of safety is that because you purchased a particular share at a cheap price, the likelihood of its value rising now outweighs the likelihood of it going even lower. Rule number 2 is, well, don't forget rule number 1. By creating a watch list for himself, then waiting for the stock prices of these shares to drastically decline, he has amassed a fortune. It is very possible that firms you purchase when they are on sale will be worth more in a few years. Market prices will fluctuate, but you should have the foresight to hold on to your assets when they do. Since most businesses are headed upward over the long term, you won't lose any money, except if you sell the stocks for less than you originally paid for them. If you purchase excellent companies at a discount and retain them for 10 years, you will almost certainly make money. Investing really is that easy. All you have to do is wait if you have money invested in a reputable company. Therefore, if the market is faltering and the stock price of your company has just declined, try not to panic. People lose money at this point because they are unable to wait for prices to rise again. The last typical excuse given by people is that they are short on time. The one profession where you don't have to put in a lot of effort is investing. You just need to work hard and occasionally make the right choices when it comes to investing. Your finances and riches will begin to increase on their own. It won't take that long if you do it the right way. So, after setting up your watch list, managing your portfolio should take no more than 15 minutes per week. Anyone can devote 15 minutes per week to ensuring their financial future, right? So, what does this show us? Investing is easy to do. You can start by putting aside your excuses and doubts. Nothing and no one is preventing you from making investments and grabbing opportunities right now. Your biggest enemies are fear and overthinking. All you have to do is stick to a sound plan. Just start learning more about businesses and the markets they serve. Do some research on companies whose business models you're familiar with. Your chances of succeeding can soon decline if you select an entirely different industry. Create a final watch list of the companies that, in your opinion, appear stable and financially reliable. Be a predator and start buying up their stock from the market when those truly good companies go on sale. When investing, have a lot of patience. Yes, there may be occasions when the stocks you bought at what appeared to be their lowest prices turn out to have fallen even further. Price fluctuations are a typical aspect of the stock market. Smart investors are aware that they shouldn't worry about such market swings. They typically have a large sum of money on hand specifically for this use since they make investments whenever the market falls. Maintain a long-term perspective. The next time you find yourself using one of these typical excuses for not investing, you better stop and think again. That concludes today's video, which we hope you enjoyed and learned something from. Give it a thumbs up if you liked it, and consider subscribing to the Inlet Financial Coaching channel if you haven't already. Thanks for watching, and we'll see you in the next video.